Welcome to Trading Lounge and the US indices for Friday, December 9. Starting on the weekly chart here, we just want to go over the two counts. So we're going to just give equal weight to being bearish and being bullish, because at the end of the day, for me personally, is that for me to be bullish, as I've always mentioned, I need to see that 4,000 as a tested support with a classic trading levels pattern established on there, and we do have half of that pattern sitting there already, but we still need the rest of it, and we'll look more closely at that in a moment. But just from the outside here, it's possible to look at the market as the A wave, the B wave, and the C wave here. It's possible to look at this move here as, well, just wave one, probably a smaller degree, but that's fine, and then coming back for wave two here, and then of course going up for wave three. Now that's a really good possibility at that point. Okay, so we'll take that on board, and what we'll be looking for is, once we've got wave one in already, and we'll be looking for wave two. So wave two has started. We've got the first little move down here at the moment, and the volume is confirming that we will be coming down further. We'll look at that on the daily chart on the SPX. So we'll be looking for a trade setup once this is established here, and we'll be moving in on the 4,000, and we'll end up getting in a little bit before that as well. At the same time, we also need to be mindful that really what's occurring here is that the market is moving down. It has vibrated through here, and in a way, it's, when a market moves from, one side of the market to the other side, it has the arrival, the reaction, first high above the level, and then testing for support. If it takes out the highs, well, then that's tested and it can leave at that point. But this is the same coming down here as well. So really what it's doing at the moment is that it's testing supply here at this number, and it can fail at this point and move further down here for a wave C here, and we'll look for 5 waves on that point. And there's a couple of different ways we could look at that. We could look at this here as the A wave, the B wave, and the C wave down here, and look at it as a WXY as well. So we just need to be mindful of that bearish side of the market. Let me just sort of go back here for a moment. I remember this grey line is a medium levels halfway between two major levels, and this would be the same down here as well. So 2,000 is a major level, and 3,000 is a major level. And I remember when this came, when the the COVID thing came, and yeah, it was the same thing down here as well. In this case, we'd called the low in here, but obviously we needed to confirm it, and the confirmation was, it was a little bit tricky, but basically in a nutshell, we wanted the market to move back above the 2,500, and then we wanted to come back and test it, and then we wanted to take the top out here. Now, that was our trade, so we got that trade because we did all the right things at the right time. We did get in earlier, and we did make some mistakes in here, but generally I thought we did quite reasonably well with all of that. And so that's what that being support, that moving above a level, a price point, and then coming back and checking it and then taking the top out, that's a long way from here to here, of course, but that's the way that we handled it, and that's the way that we got it. We got that. So it's really what we're doing here as well. And you have to ask yourself before you go long here, is that closest largest number, is that support at this particular point in time? And well, currently it's not, but the classic trading levels pattern, which is really quite simple. It's the arrival, the reaction in 3 waves, and normally it pulls sort of down like this, but in this case it was an ABC going sideways, which is quite a strong point. And then the first high above the level that we look for, and we're looking at 4.1 to get that, so we've got that. And then now we look for the corrective pattern, which is the ABC pattern here. And then if the market's going to go up, then we just simply go long above this point here. Now there's always room for improvement, as my wife looks at me. So, you know, we should be able to build in down through here for this as well, but we need to get like an impulse wave here. We need to get some, you know, some detail at that particular point. But this is the pattern at this medium level here that we're looking for, and currently this move down through here, we're just still in that current move down here. So we need, on the bullish side, if we're going to look at that as wave 1 and wave 2 here, as an A wave here, a B wave here, and a C wave here. And like I said, yes, we'll try to build in over here if we get all the right, you know, if we get the right look and feel within the structure, we'll do all of that. In the meantime, if this top gets taken out here, that means we also, this top here, because we always start with the top first, we always get a better entry than that. But sometimes it just, you know, comes down, you know, sits on the level and then moves off again. So, you know, this prevents us and helps us get long at the right time. So that would be looking at wave 1 and 2 in this case. The other side of this, of course, is that the whole move up here is a B wave. So we can look at this as an A wave, a B wave, and 1, 2, 3, 4, 5 as a C wave for wave B. And then we're looking at our first impulse wave here, and we're not looking at it as an A wave. We're looking at it as wave 1 here. We're getting all the right volume signals here too. So let me just, this is the SPX here, and it's the daily chart. And what I want to just point out here is that, yes, we got strong volume here, but we never got any follow through. We got lower volume, which is corrective, which is okay. This move up here is really the danger one here, because it actually moved up on lower volume. So that's divergence between price and volume. And then, so we know that you should know that's a problem at that point. Now, this is moving down here, and on increased volume, it's got more volume than the previous bar. Because really it's the relationship between the current bar and the previous bar, and the volume bar and the price bar, and the range within the price bar and the opening closing. So it's a relationship between these two and these two. And then we've got increasing volume to the downside here. So we're getting increasing because a trend to be a trend needs increasing volume. And then what we're seeing here in these 2 days here, obviously today's session I think is just about finished, should be, yeah. So this little move, this move up here is on lower volume. Like this one is moved up, but it's on lower volume. This one's moved up, but it's on lower volume. Now sometimes they got curb trading and they might add some volume to this and it could change it a bit. But basically what you're looking at here is you're looking at the market volume impulsing to the downside and decreasing to the upside on the short covering. So this is telling me that the pressure is to the downside here. So when we're looking at this, we're going to be looking at this particular move coming down here as wave 1 or wave A, and we're looking for it to be in 5 waves. I don't think we've got 5 waves yet. There's some stocks like Meta that it does have 5 waves down here. So there's some stocks that are and some that aren't. So there's a bit of a mixture with everything. So we're going to go in and have a look at the bearish count first while we've just been talking about that. So we're going to go to 50K. So I think it's important to understand both counts, and then all we need to do is the right thing at the right time, you know, because, you know, it's nice to be right, but the reality is that's, you know, you're not going to be right all the time. But if you understand both sides of the market and then look for your trade setups, and, you know, if you get it right and you've got the wind in your sails, well, then it's all good. So this is the bearish count here, where we've got wave A and B and 1, 2, 3, 4, and 5 here. So we can have it as wave 2 or wave B, and it doesn't really matter at this particular point. But we're looking for 5 waves down here, and I think that we've got 1 and 2 and 3 and 4. We don't have this 5th wave yet to make wave 1 here. 5 waves to make that impulse wave, and then wave 2 will retest the 4,000 or close to it. And in a nutshell, you could imagine that if the market does give us a larger 5, if we get 5 here, we're going to get 5 over here. But in the bullish market, that could just be the ABC pattern at that point, and push up from there, you know, coming into the 61.8%, which is always good to know where that sits. So I'll just put it in that little pocket there. That's the 62 and 65. So, and obviously we've got really good support there as well for that. This is also group 2 here, minor group 2 in terms of the trading level. So that will be 36.50 at that point. So yeah, after number 5 is 8. When we talk about 8, we talk about group 2, 36.50 and 72 in here. So we're going to get that strong support there, which so we just need to be a bit of a blind spot in this space. We won't know if we're going to get that move up here, or we're in some sort of wave 4 and we're going to come down again. So this is a little area here where if you were short here, that you could take some profit and just chill until we get that, till you can see what's going on at that point there. But in a nutshell, this move up here would see roughly 5 waves come down here. And then we'll get a bounce off the lows there, of course, as wave 2, and then we would come down further. So really the longer we can trade wave 3 down here, that's really not a problem. It'll either be wave, if we get 5 waves here, then we're going to get another 5 over here. Now it could be an ABC, and we can trade the C wave down, or wave 3 down, and wave 3 will be quite quick, where wave C will be a bit lazier. But the real trade will be over here for this. So we'll also come back down to this point here in 5 waves roughly, and then we'll come back again, and then it's always about, you know, it's like water going down a river. It's always testing the point of least resistance. So that's the bearish side, and we're going to have a look at the bullish side now, and then we're going to go in and have a look at the detail in this little area through here. So on the bullish side, we're at 20k and 10k. Now there's a couple of different ways we could count this to the upside, but the important point here is that at the moment the 4,000, it's not support, it's not resistance, it hasn't rejected the 4,000, it's basically vibrating across it, and yeah, we just need to have a little bit of patience for this. I've got this as 1 and 2 here, then 1, 2, 3, 4, 5 for 1 and 2, and then 1, 2, 3, 4, 5 for the third wave. You know, there is also a case too. I don't think it's the case here much, but more so in the FX market, because the euro and the pound are doing the same thing here. We could look at this as an A wave, a B wave, and a C wave here as well. We'll get one more move here for the C wave. Probably not a fantastic thing, but it's kind of there. So I don't think this is wave 4 here, because we've already got we've got 3 waves down here. But the problem is the little move that's moving off the low here. It does appear to be corrective, and stocks can confirm that. But let's just move into the next move here. This is looking at it just simply like this, as I mentioned before: 1, 2, 3, 4, 5 for 1. The A wave, the B wave, and the C wave. So I still think we've got one more little move down through here, and then the B wave, and then the C wave into that space, and then we can move up from that point. And normally, you know, we will look to go long above the top here, and then we drop that down to the B wave over here. And then what we try to do over here, we think to ourselves, you know, if this is wave 3 here, well then as wave 4 moves up here, if wave 4 moves up to the 38.2% retracement level of that move here, but it's in a nice 5 wave sequence rather than a 3 wave sequence, well then we can also look to start to build in here with this, you know. It could be a part trade and all those sort of things. You could buy on the turn. It doesn't matter what you do, as long as you know what you're doing, because at the end of the day it's about managing your exposure. So that will be that. But we'll either be doing this, or we'll be coming down here further at this point. It can be a little bit tricky, because we could go 1, 2, 3, 4, 5, right? Or we could go down for 1, back for 2, down for 1, back for 2, down, you know what I mean? And do that scenario. So we'll talk about these along the way, of course. I'm just going to go to I think there's another bullish count, but it doesn't matter at this point in time. It's just chin wagging. So I'm just going to go to 1,000 ticks and then the 100 ticks, and that way we can just have a look at this. Now, this doesn't have to be, this is still the bearish count here, but it doesn't need to be, that doesn't need to be a wave C of anything, or wave 1, and this could be an A wave and a B wave here. We don't know that yet. All we're doing here is tracking the intraday count, and the intraday count so far is wave 1 here with an A and a B and a C, and then 1, 2, 3, 4, 5 here for the third wave. The 38.2% retracement level, the market's hit on that quite nicely. So we could look at this as, see, the thing here, why it's not going to be bullish from here is because this move up here, we could look at that as 5 waves. And then we've got a correction, then we've got really some other little sort of structure here. This is not impulsive, I suppose we could look at it as wave 1, and then an A wave, a B wave, and a C wave of 1, 2, 3, 4, 5 possibly. But you're sort of bending, pushing, forcing, those sorts of things at that point. It does appear to be corrective at this stage. And one of the things too is that we were talking yesterday about Thursday being in the bullish weekly cycle and the bearish weekly cycle. If we're in a bear market, then Thursday is normally the rally day. If we're in a bull market, then Thursday is a day that it pulls back. So what we're looking for on Friday is that in a bullish market, Friday is normally the bullish day. In a bear market, it will be a bearish day. So just keep an eye on the sentiment of Friday morning, where is it, and Friday afternoon. And wherever it ends up on Friday afternoon is highly likely where it's going to continue on the Monday. So 1, 2, 3, 4 to here, probably 1, 2, 3, 4, 5. This could also be an expanded flat correction in here. So the A wave, the B wave, and the C wave here, and then have one more high here. But yeah, it's looking a bit corrective in there. But look, if it just pops up here a little bit, still just continue to be a wave 4. But what we're looking for is wave 1 to come down into 3900. Might come a little bit lower here, 3880, something like that, and then have the ABC and then down at that point. So in both cases that we're looking at, we should be seeing this occur here. We should see this be moving down here further. And just on, that's 1000 ticks, just on 100 ticks, I don't know if it's going to give us much more than we already know. Yeah, so the top here can be a whole lot of things. It doesn't really matter at this point. So, I mean, you could probably count this differently here. You could probably put wave 1 down here. You could probably put this as 1 and 2, and then 1 and 2 here, maybe. Bit of a long shot for that one. But, yeah, I think everything fits okay as wave 1 and 2, 1, 2, 3, 4, 5, the third wave, the fourth and the fifth. I think everything's sort of okay at this point. If this low here goes, then you'll be coming down at this point, right? Because if this was going to be an expanded flat correction here with an A and a B and a C, then this low needs to stay in place. So that would be it there. It's banging its head against group 2 here, which is subgroup 2. And the midpoint will be important here as well, the 3950. And then you've got 30, 20, and 10. So 30, 20, and 10 is where you start to see the market, bounce around a fair bit. It's what is typical here, but it should be a bit easier, but not much at that point. And then you'll have wave 5, and then you have the ABC. Now this ABC, this is the 50-60% back up at this number. It may not get up there. It may just be, coming down to these levels here for that. So this will be wave A, normally comes back up and hits around the top, gets pushed back at that point, and then you'll start to see it be, the C waves are a bit, normally, most of the time, they're a bit lazier like this, So try to count 5 waves in here, and if you can't count 5 waves, then you've got to wait for the drop and count 5 waves in here and then the retest and then down, and that's where you can catch it at that point. Alrighty, so that's that really. Most of the other markets are pretty much the same as well. So let's just go in. Oh, what I also wanted to say as well is, let's just go back here for a moment. Just bear with me for a second or two. So while this is moving down here, right, then we're going to see the US dollar. That should push up here. So this is the US dollar here. So this ABC pattern here, we should see this push up. If this pushes up, keep an eye. If it's pushing up, takes out this top here, then you know that the S&P is bearish at that point. Okay, so just keep an eye on the US dollar. It'll be doing the inverse. And let's just go over to the NASDAQ. So it's the same for the NASDAQ as well. Just, I don't need to go into the bigger picture. I mean, this has got more of a bearish picture, really, this whole thing. I mean, you could look at it as wave 1 and 2 and 1 and 2 here, but it just kind of much nicer as an A wave, a B wave, and a C wave up here. So it's got a bit more of a bearish thing. But look, it's not over until the big lady sings. So, yeah, there's two ways of looking at this. So we just need to be, this would be wave 1 and 2 here, and then wave 1 here and 2 here for this. So if this top gets taken out, we just have to be bullish. So we're working with the 11,500, which is a medium level, bit of an odd looking number, but you can sure see that the trading levels do a pretty good job of defining support and resistance, and most winning trading systems that you see one way or another sort of come back to support and resistance, supply and demand things. So anyway, this is 1 and 2, the same thing, 1, 2, 3, 4, 5 for third wave, the A, the B, and the C wave up here. We've got that expanded flat thing here, so this could be 1, 2, 3, 4. So we could quite easily get a little move up here for this, so just be a little bit mindful of that. For this to finish off, I mean, I could squeeze a fifth wave out of this. I could go 1, 2, 3, ABC for fourth here and up for fifth on this top here, but I can see it in two different ways. So just be, if that low gets taken out, then you can be short at that point. Not that it's going to be a fantastic short, but you'll get a beer out of it. So that's the NASDAQ, and same thing here, back up into the 56%, and then down again at that point. So maybe this all just happens on the Friday, and you know, we get into this next week coming down here. We'll see how that goes. And the Russell. So I've got this here as wave 1 here. You could put wave 1 here, I guess. It doesn't really matter. Whichever way you look at it, you still have to put wave 2 here. This counts quite nicely as wave 1 coming down here, and 2 here, and 3 here, and ABC for 4, and 1, 2, 3, 4, and 5 down here. So it's pulled back up to the 38.2% for the wave 4. So yeah, maybe it's done its thing, and all it needs to do now is come down into, this is 1800, which is a minor level, and this is its subgroup 2 below here. So it'll do that, and then it needs to play out here somewhere and then come down at this point. So it's got a bit of a journey, all of this. I mean, I do this nice picture here, but then it's sort of like, it looks like somebody drunk walking home when the time that the market goes over this particular pattern. So just take that on board as well, you know. But always good for wait to things to mature, you know, like to get it, even if it's, you get it a bit later, it doesn't matter. And the DJ, so we're looking at the same thing with 1 and 2, and I've got 1 and 2 and 3 and 4 and 5 here for that. You could probably count that a bit differently, but I just felt that was 1, 2, 3, 4, 5 here for 1, little ABC for 2, 3, 4, and 5. Just dancing across 34 there, Fibonacci number 21, 34, 55, 89, so on. So the A, the B, and the C wave here, I can jam it, the C wave, I can jam 5 waves in there with 1 and 2 and 3 and 4 and 5, but it kind of counts better as 1, 2, 3, 4, 5 as 1, 2, 3, 4. It hasn't really overlapped that a lot. It has and it hasn't. It has a bit. So it could also just go up here before going down again here, right? So just be a little bit careful about that situation. I think this is a case when, you know, this kind of price action here can really rock your boat and do your head in, you know. So you're better off trading less and having much wider stops for all of this sort of thing. Alrighty, I'm going to leave it all at that. Thanks for tuning in and enjoy the weekend. Cheers.